Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the bad news bears can't catch a break at present. Overnight, US data was quite good again and has seen underpinning more US Fed rate hikes, with the next one due on July 27 New Zealand time, just before their summer holidays. US jobless claims came in lower than expected, with a decrease of 18,000 from the prior week. Seasonally adjusted, that was a bit higher than that, but still lower than expected. And the third and final calculation of the first quarter 2023 GDP for the US recorded an expansion of 2%, which was much better than either the two prior estimates. Analysts had expected a 1.4% final result. Higher consumer spending was essentially behind this result. But what really got analysts' attention was the higher inflation rate in their PCE version for April. A 4.4% annual rate, and an annualised rate higher than this between March and April would not have been unnoticed by Fed policymakers. And because they'd already signalled more hikes and speeches earlier in the week, markets are now bracing for a robust response. Clearly, inflation's impulse isn't beaten yet, and probably won't be while their labour market is expanding so quickly. The June non-farm payrolls data will come out a week from tomorrow and will be very closely watched. Bets are now being placed that it will increase in another impressive way. In China, their fast expanding EV car industry is facing a reckoning, one their country doesn't need. Many smaller EV manufacturers are either going bust or being swallowed up in a big consolidation drive. But the real problem is that production and capacity is far bigger than demand. And Japanese retail sales rose 5.7% in May from a year ago, and handily higher than inflation's effect, so a real gain there. We should note that this expansion has been running higher than 5% for every month in 2023, and that is the longest streak at that level since the late 1970s. Overall, global containerised freight rates fell sharply yet again last week and are now 80% lower than a year ago and almost back to their 2019 pre-pandemic average. Outbound rates from China is where the main weakness is. The US Treasury 10-year yield will start today up sharply at 3.85%, and a jump of 13 basis points from yesterday, and the highest since mid-March. And the price of gold will start today at $1,908 an ounce, and that's down $4 from yesterday. But oil prices are little changed, done just over $69.50 a barrel in the US, while the international Brent price is $74.50 a barrel. And the Kiwi dollar starts today at 60.7 US cents, and a little change from yesterday. Against the Aussie, we've slipped again to 91.6 Australian cents, and against the euro, we're a little change to 55.8 euro cents. But that means our trade weight index has fallen to 69.2 and down another 20 basis points from this time yesterday, and all of a sudden at a 4-week low. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.